As we all know that the Nifty PSU Bank stocks have been one of the best performers that we've had so far in 2021. The index itself has surged more than 40% since the start of the year. However, last week we did see some bit of a halt or pause come about for the PSU banking stocks. So that's the big question, whether the rally has come to an end or whether it is a pause or just a minor halt that we've taken for the PSU banking stocks. Let me highlight an important technical pattern that has been formed on the Nifty PSU Bank Index, which is called as the bearish reversal pattern upside gap 2 crores that it formed during the last week. It has not only formed a bearish reversal pattern, but it has also retraced from its 200-week moving average for the second time this year. So clearly the 200-week moving average has been established as a resistance point in the near term as well. But like I was telling you, they were one of the worst performing stocks that we've had in entire of last week. The Nifty PSU Bank Index managed to snap its 2-week gaining streak and also end as the second worst performer on the sectoral indices for entire of last week. All stocks also managed to decline last week, wherein SBI was the outperformer, but that too declined less than 1% for last week. There were other stocks which declined more than 5%. Central Bank of India was down about 6.5%. Union Bank was down nearly 6%, while you had UCO Bank, which also managed to slump more than 5%, followed by Punjab and Sindh Bank, which was also down more than 5% in trade. Now, some of the technical factors that I have to highlight, while looking at the Nifty PSU banking stocks. One is the relative strength index indicator, which shows you the overbought or oversold condition of a particular stock. At the moment, none of the PSU banking stocks are overbought or oversold on their RSI. If you have a look at the shorter term moving average, which is the 50-day moving average, there are 3 stocks which are currently more than 20% higher as compared to their 50-day moving average. If you extend that time frame to 200-day moving average, all of the stocks are currently trading above their 200-day moving average. But if you have a look at the 200 weekly moving average, all stocks are currently below their 200-week moving average except for SBI and Bank of Maharashtra. Now talking about the expected return from some of these stocks, there are stocks where the analysts are quite bullish and bearish. So there is a wide spectrum that we are dealing with. J&K Bank analysts are anticipating a downside of 36% over the next 12 months. Bank of India almost 10% downside that analysts are anticipating, followed by Union Bank of India 5% downside, followed by Punjab National Bank, which is also anticipated to deliver negative 2% return to its shareholders over the next 12 months. On the positive side, you have Indian Bank, where the expected target price is 31% higher as compared to its current market price, and SBI 20% upside potential for that one as well, followed by Canara Bank and Bank of Baroda, which are also anticipated to deliver double-digit returns over the next 12 months according to the consensus analyst target prices that they have on these stocks.